Hey guys, it's Marc Ventura here. Hope you're well. Today I'm recording this video just to give you a better idea around what's it like obtaining finance within that self-managed super fund space so people can buy property. It's one of the things, I guess it's an area where there's constant change that's happening, and only in recent times pretty much really all the major banks have pulled out of the self-managed super fund lending space. So today I really thought it'd be timely in recording this video to give you a better idea around can you still obtain finance within property within self-managed super fund, which is yes. But generally it's not in the domain of the major banks, it's in this domain of the smaller, what we call second tier lenders who are really specialising in this self-managed super fund space. So today I wanted to give you an overview of what it looks like around very much the deposits and the funds you need to be able to purchase a self-managed property within self-managed super fund. So I'm going to take you through an example. It's going to be quite brief. Again, it's in no way is it personal advice. It's very much just in a generic nature, just to give you an overview of things to understand and what to take into consideration when you're looking at financing property in self-managed super fund. So I'm going to take you over and start showing you through an example. So, for example, let's say we've got a property that's worth say $600,000 that you're looking to purchase. And I'm going to take you through the deposits and those sides of things. So, if we're looking at $600,000, now depending on the lender that you're dealing with, or the lender that we deal with on your behalf, and depending on the location, the deposit's going to range in the vicinity of 20 to 30% deposit as a minimum, plus the associated costs available. So let's say we're looking at a property within, I guess, a capital city of Australia. In this situation, we'll focus on Melbourne. So somewhere, within 30 k's of the city, we're going to require generally a 20% deposit in this situation. So we're going to look at say a 20% deposit. And in this situation, we're looking at minimum deposit is $120,000. We're also then going to need funds for things like stamp duty, legal fees, and the like. So in this situation, we're going to also need roughly another 40k for stamp duty. We're going to require another couple of $1,000, another 2k for say legal fees, for legals. And that's pretty much going to sum up the actual deposit. So in total, we're roughly going to need around $162,000, 162k in deposits just to purchase this property. Now, that's just the starting point. The next step we've got to look at is what are some of the other funds or extra money that the bank's going to require for you to have available to then obtain the actual finance. So what I want to take you through now is a little bit of an overview of what are the other funds. So we know now that in terms of deposit funds, we need roughly $162,000 in deposit funds that covers the 20% deposit plus the extra cost. But when it comes to obtaining the finance, there's also some extra money that the bank's going to want to see. Now, based on this property, we're going to have roughly a $480,000 loan. And if we take into consideration roughly a 6% interest rate, you're going to be looking at roughly needing 12 months of repayments up your sleeve. The bank is quite, how would I put it, conservative in the self-managed super fund space. So they're generally going to want to see that you've got a 12-month period of repayments up your sleeve. Even though the rent will be coming in or your employer contributions will be going into the super fund, they'll still want to see that you've got 12 months of repayments up your sleeve. And in this situation, you're roughly going to need a further, up to almost $30,000 up your sleeve. Now, the other area of extra funds available that you're probably going to need to have available as well is, I would say probably another $15,000 to $20,000 to cover things like accountants and auditing and tax return fees. You're going to need some money available for financial advice fees if you engage a financial advisor to not only help you look after the property, but potentially if there's other investments, in shares and stuff like that. So you have potentially some financial advisor fees, and you'll also have what's highly recommended is making sure that you've got some life insurances and income protection, covering you in the event of death or disability and stuff like that. So overall, I would say you probably want up to another sort of $20,000 for those sort of fees. So in total, you're probably looking that if you're wanting to buy that sort of $600,000 property, you're really going to need roughly, about 109, almost $212,000 to purchase this property at that sort of $600,000 purchase price. Now, there's a couple of different ways that you can finance your property. As I touched on before, there's the smaller lenders, or those second tier lenders, the lenders that are really starting to specialize in this space. Those interest rates are roughly around the 6% mark, but there are some strategies out there where you can actually obtain lower interest rates. So when we're talking about self-managed super fund, there's a lot of work that goes involved into helping people buy property in self-managed super. There's a lot of advice you need to obtain. So when we're working out the correct or the best finance structure for you, it's something that I guess really involves a really deep and not so much deep, but a personal conversation around your circumstances and the different finance structures. So if you've got any questions, please don't hesitate in contacting us and having a chat. And obviously remember that this information here is very generic in nature, and it's not taking into account any personal advice. But have a great day, and I'll speak to you soon.